Good morning. You are watching a live daily market outlook for Wednesday, 16th of May 2012. As most of you can see, a lot of action in the markets today as the turmoil continues to pressure the major currencies as commodities, and basically only US dollar benefiting from the current situation. Greece, as the main driver of Eurozone, has announced yesterday complete failure of the meetings that were about to agree for the new government, and now Greece is entering a new period of crisis with the technocrat government expected to take over until the next elections will be called sometime in June. That will possibly give us some more clues about this. The negative sentiment on euro actually accelerates. Losses as break below some figure points at 128 and 127 where the stops were mainly concentrated, triggered the fresh weakness, and the euro is now heading towards its January's yearly low at 126.22 with no obstacles seen on the way, as well as cable that lost significant supports at 160.50 and 160, breaking below the later one, and heading towards 159 as initial target, ahead of some levels below 159 and strong support at 158. The dollar yen holds its recent gains after breaking significant barriers at 80.00 and heading towards the next obstacle at 80.60, while dollar Swiss in a steady rally after clearance of 93.30 and then 94.00 resistances, with focus on the yearly high at 95.93 with some minor barriers seen on the way. Dollar Canada broke its strong barrier at 100.50, where is also the 200 days moving average, as well as multi-month range top, and heading higher, 101.60, 102 seen as the next targets. The biggest losers are commodities, as the crude oil continues to spiral lower with the loss of our target at 92.70, low of 16th of December 2011, now heading towards 90.00 and possible extension towards a low of 2011 at 74.94 now, quite likely, as the situation seems to be running out of control and the extremely negative sentiment pushing the commodities lower. Gold also testing critical support 1532, 1522, double bottom of 2011 September, December, a break of which to open a way for a more significant extension lower, with the levels below 1500, static support at 1478 and the Fibonacci extension at 1356 seen as a short term targets. As said, the euro hovers and actually keeps posting 4-month lows against the dollar, and is really likely to extend the hefty losses sustained so far this month after Greece, as I said, the main driver of the euro currently would hold the new elections. From today's calendar, we're going to take a brief look before we move to the technical outlook. That would be the most interesting part for today. Number of indicators are due to be released today, starting with the, apart from Australia, that was during the night, from UK at 8:30 GMT, average earning and unemployment rate. No changes in these figures. 8.3 unemployment rate is expected to stay unchanged on today's release, with the unemployment claims expected to increase to 4.9 thousand compared to 3.6 thousand of the release of March. From Switzerland, the zoo economic expectations, we have no forecast. 2.1 was the previous release. One of the top releases for today is European inflation at 9 o'clock GMT. April reading is expected to stay unchanged at 2.6%, while core CPI is expected slightly to decrease. Today's forecast is 1.5% compared to 1.6% of March's release. EU trade balance at the same time is expected to widen the trade surplus to 4.3 billion euros compared to 3.7 billion euros of the February's release. The UK's Bank of England inflation report is due at 9:30, when the Governor Mervyn King will have a speech and give us more clues about actions of the UK, Britain's central bank, and the current situation in the UK's economy. Across the ocean, Canada's manufacturing sales for March due at 12:30 GMT, improvement to 0.4% compared to a negative minus 0.3% of February forecasted for today. And batch of data from US building permits for April at the same time, a slight decrease to 730,000 permits compared to 750,000 of the release of March, while housing starts are going to increase to 690,000 units compared to 650,000 units in the month of March. U.S. industrial production for April is due at 13:15 GMT, an increase by 0.6% is seen for the April's release compared to unchanged reading of March's release. ECB President Mario Draghi is due to speak at 1400 GMT, while US crude inventories weekly release is due at 1430 GMT, with another build in the US stocks seen for today by 1.5 million barrels compared to build of 3.7 million barrels of the release of last week. And finally at 18:00 GMT's FOMC minutes of the last meeting of FOMC in April. We're going to take a look now at the markets and see more detailed look for the major currencies and commodities and see the expectations for today. Starting with euro, as shows on the short-term charts, the pair continues to spiral lower as it lost recently its strong support zone at 130, 129.50. Would break below psychological supports at 128 and 127, where also a number of stops were parked. Triggering stops has increased the pace of the descending, and now opening a way for test of our next very strong support, 126.22 yearly low posted on 13th of January 2012. Extremely extended and oversold studies on the lower time frames still having no impact on the current descent, as the pair still shows no signs of any reduction in the speed or recovery attempts for now. As said, despite very extended to the downside studies, larger time frame studies remain firmly negative, with RSI now on the daily chart in the oversold territory. Again, no any clear signals of any recovery so far, with the likely scenario for test of 126.22 yearly low. On the larger picture, the pair has lost ground after a break below longer-term trend line drawn of 118.75, low of 2012, posted on 6th of June, with the last obstacle seen at 126.22, a break of which may open way for a further extension of broader downtrend from 149.38 peak of 2011, and the focus 120 zone very likely in the short term, as negative news and the negative outlook from the Eurozone keeps the heavy pressure on the single currency against US dollar, and so far no any signals that might be more or less supportive for the block currency, and that keeps the very negative sentiment among the investors to keep increasing their shorts of single currency against the US dollar. Similar situation with the British pound that increases the pace of descending after losing its strong supports at 160.50 and 160.00, a break of which has so far seen 159.34 low. This was the low of this morning just a couple of minutes ago posted, and the pair continues to trend lower. On the daily chart, we see that basically break below the longer term bull trend line drawn of 2012 low at 152.33 is now softening the tone of the larger uptrend from the yearly low, and the next, as well as loss of 55 days moving average at 159.59, pardon, is looking now for test of 159 as a round figure support, and 38.2 Fibonacci retracement of the entire rally at 158.52. That would be our next targets. No serious benefit of the golden cross that occurred a couple of days ago when the 90 days moving average crossed above 200 days one, as the pair continues to trend lower and basically break below 158.52. Would be looking for test of 200 days moving average that currently stands at 158.27, ahead of another very strong static support, 158 zone, the higher platform of beginning of April 2012. Time frames lower, and the larger time frames studies remain negative, as a positive tone on the daily chart is fading, and the loss of bullish momentum now keeps the downside firmly in focus. Hourly chart studies are extremely overextended and in oversold zone, yet no signals of any recovery action, but this might be signaling that some corrective action might be seen later on. As said, hourly studies are extremely overextended and hitting their extreme points for now. A similar situation is with the 4-hour chart studies that are also very negative. On the upside, one previous supports now acting as initial resistances are 160 and 160.50, along with the 20 days moving average at this zone, expected for now to limit any corrective attempts higher. Only break above 161, 161.20 would ease the bear pressure and turn the short-term focus towards the upside. The dollar yen extends its recovery, short-term recovery of 79.42, low of 9th of May, after initially struggling at 80 zone, where is the main bear trend line drawn of 84.08 high, as well as 90 days moving average and the round figure resistance that was limiting upside attempts in the past couple of days. Now final break through these levels has so far reached 80.43, ahead of next significant barrier at 80.60. This is the high of 2nd of May 2012, as well as 50% retracement of the down move from down leg from 81.77 to 79.42, and another signal of stronger recovery is seen on the break of this level that will confirm the temporary base at 79.42, an open way for a stronger recovery with the 87, 61.8% and 81.00 seen as the next targets. On the downside, 80.00 level now acts as initial support, along with the 90 days moving average on the daily chart, and the crossover of 20 over 55 days exponential moving averages at 80.01 now underpinning the advance and acting as dynamic support. Only loss of 80.00 and the static support at 79.67 would weaken the current structure and refocus 79.42. The studies on the daily chart that were firmly bearish now are started to point higher. Still, all indicators are in their negative territory, and further extension above 80.60 and the regain of 81 is required to confirm a change of the short-term downtrend from 84.17 yearly peak, and allow for a stronger correction of the latest downtrend with the 81.77 significant static barrier high of 28th of April 2012 seen on the firm break higher. The dollar Swiss continues to trend higher after clearance of stronger barriers at 93.30 and 94.00. 93.30 was were the previous peaks of 15th and 14th of March 2012, as well as 61.8% Fibonacci retracement of down move from a yearly peak at 95.93 that bottomed at 89.30 that marks the yearly low. Clearance of this level and the 94.00 as round figure resistance now opens way towards yearly highs with the minor barriers seen on the way up. 95.00 as round figure resistance and the 95.45 at 15th of December 2011 high are seen the last barriers ahead of possible retest of 95 and 93. Positive sentiment and studies well above their midlines and pointing higher see potential, and they are supportive for now for the pair for a possible extension above 95 and test of the yearly high. On the lower time frames, positive tone dominates, but overextended studies on 1 and 4 hour charts are signaling a possible corrective action preceding a fresh rally, yet no any signal of reversal seen. Initial support is now at 94.00 previous resistance and more significant one at 93.30 that are expected to contain any corrective dips, with the 20 days moving average at 93.66 also underpinning current advance. A quick look at the crude oil that is just continues to spiral lower, break below 200 days moving average at 96.37 has accelerated losses that broke below our target at 92.70 low of 16th of December 2011, and now looking for a further extension lower. Extremely negative sentiment keeps the strong pressure on the oil prices and looks for further losses down towards the downside, as the larger picture shows a retracement of over 50% of the up move from a 74.94 low of 2011 up to 110.53 peak of 2012, as the pair broke below 50% retracement. Now looking for test of static support at 90.57 peak of 11th of September 2011 and 61.8% retracement at 88.54. A negative tone that dominates now sees risk in the short to medium term action of the oil for a possible extension towards the 2011 low at 74.94. Now it's becoming more realistic. From the other side, fundamentals and the news remain negative, as serious fear of lower demand from the world for the energies keeps investors in the negative mode, and increases their selling positions of the crude oil, which is actually the main driver of the oil price for now, despite crisis with Iran and the sanctions imposed by US and European Union towards Iran. That's the main supplier for most of Asian markets that were also forced to accept and implement sanctions towards Iran, with the production at satisfactory levels, and Saudi Arabia producing close to their maximum production per month, keeping the oil markets well supplied. Yet strong pressure on the oil price keeps to drive it lower, with the likely price action seen towards 90 and 88.50 as our next targets in the short term. Lower time frames, negative tone dominates, with initial resistance 93.64 low of 14th of May 2012, and the recent consolidative range top at 97.67, 98 zone acting as initial resistance, where is also the 55 days exponential moving average, and the only break above 98 would ease the current bear pressure and allow for some stronger recovery. However, overall outlook remains fairly bearish for crude oil in the short term trading. A quick look at yellow metal that is now testing our very significant support at 1532, 1522 as extension lower, and the firm pressure on the yellow metal on extremely strong dollar currently pushes the yellow metal lower. 1526 seen so far, so basically the area has been already cracked, and the possible extension lower would now open way for a further extension of the larger down move from 1920 historical high of yellow metal posted on 4th of September 2011, with 1500 as around figure support and the 1478 level, low of 26th of June 2011 seen as the next targets on the downside, as the pair broke below 90 days moving average on the weekly chart, keeping the focus firmly lower for now. Some consolidation might be seen around this zone, as this acts as a very strong support, and quite extended studies on the daily chart might see some corrective action in the short term. However, not any signal of any recovery yet from the indicators, as the gold's price and the studies are aiming towards the downside and keeping a firm bearish tone. Similar situation with the lower time frame studies that are in the negative territory, but hitting their extreme points. That also might be a signal for some corrective action, but yet no indication of any recovery action for now. We will be closely watching the markets today and see the possible corrective actions that usually come after such a strong moves towards downside in this case. A quick look at Aussie dollar, as the stronger US dollar drives their counterparts lower. The Aussie hit our initial target on the downside, the previous low at 98.80, lows at 98.80, 98.60 with the 98.75 seen so far. These are the static supports of December 2011, lots of which will open way for a final push towards towards the 2011 November's low at 96.63. That is seen as our next target, and basically a loss of this level would open way for more significant spike low of 93.86. This is the low of 2011, posted on 2nd of October 2011. Negative tone continues to dominate on the daily chart, as all studies are aiming lower, while lower time frames also keep the negative structure. Some overextended conditions are seen on the 1 and 4 hour charts. Again, no any signal, as the pair is still in the strong downtrend. No any signal of any corrective action seen for now. And final look at dollar Canada, that is that cleared actually some very important barriers on the upside, and heading higher. The initial barrier at 10050 that marks the multi-month consolidation range top, and the 200 days moving average has finally occurred after several unsuccessful attempts, and dip lower below parity level that found the ground at 99.52 a couple of days ago, with the fresh strength now clearly breaking above this barrier and opening way for further correction of the latest down move from 105.21 25th of November 2011 peak that bottomed at 97 and 98 on 27th of April 2012. Recovery is now looking for test of 50% retracement that stands at 101.60, with the next Fibonacci level at 102.45, 61.8%, below which we have a psychological barrier and around figure resistance at 102.00. positive tone seen on the daily chart with the lower time frames also holding studies well in the positive territory and still aiming higher. Overextended conditions on the hourly chart might be signaling some corrective action ahead. No signals so far as the pair continues to move higher. That was all for today. I would like to thank you all for attending our live sessions. I hope we gave them enough information, especially today that the markets are quite active. For all those that missed any part of the session, you can find it shortly uploaded in the Windsor Brokers Windsor Brokers page, pardon, in the YouTube called Windsor Brokers Forex. We'll be back tomorrow morning at the same time at 7:00 GMT. In the meantime, on our page on the YouTube, you can also find the latest technical updates for most of major instruments and commodities. I wish you a very nice day and successful trading. Good luck.